Welcome to Charts Today. It's Thursday, the 14th of May, and I'm back at my desk after 3 days of training energy clients. And in fact, this is a chart of UK electricity prices. And I spent yesterday at the UK's biggest power station, seeing a long-standing client there. Absolutely fascinating there. I got a tour of the power station. The turbine hall's half a mile long inside the turbine hall, went right round the power station. Really interesting day. So one of the more interesting days of my work, really. And then I sat down with the trading team and we went through a whole series of strategies. And of course, they're looking at the power price the whole time. In fact, the day before, I was working with a government procurement agency that is a very big purchaser of energy, and looking at gas and power prices, we still see power prices in the gas prices in the UK very elevated. We are seeing crude oil still elevated on the situation in the Straits of Hormuz, and there's almost like a $20 range. Just waiting to see which way we break out. And we painted these three scenarios. It all gets solved very quickly, which we consider to be unlikely. This stalemate goes on for some time, or it descends into a hot war where we see a really big effect on prices. But we are seeing big effects. And again, if you think of things like jet fuel, this is 50% higher than it was at the start of the year. That's really going to be harsh for airlines and for air travellers. And if we look at things like RBOB gasoline, this is the petrol pump price that people pay in the US. This will be very politically difficult. That is virtually double what it was at the start of the year. So again, really, this is starting to get embedded. So the energy mix is falling back a little bit today, but we are seeing basically we remain elevated. So we're seeing here the dollar index, and that is running sideways now for a year, which means when it does break, the break will be very significant indeed. The long-term trend, this is the weekly chart, we do have a downside target and we are below the clouds. So, but we have to wait to see if we break to new lows on the dollar, and then it could move very, very quickly. Looking at other currencies, the euro, no big change there either, because this is effectively the dollar index is predominantly the euro. Looking at Japan, we have seen intervention at this sort of cloud level. This 160 level is scary for Japan, remembering this is the dollar buys more yen. Sterling, we've had good news out on the UK economy this morning, up 0.6% last quarter. I think that's a surprise to most, but sterling is very range bound. The political issues still hanging there. And if we look at the Swiss franc, this has been one incredible chart, and that is clearly just the dollar is a weaker here, just slowly trending down. The rupee I've talked about before in India, this hitting 96 yesterday, so that really is significant, and we are just seeing that trend continuing. And if we look at the Chinese yuan, again, the dollar just sinking lower here, so that's really quite clear. And then the Aussie dollar, that is looking pretty bullish against the dollar, with Aussie interest rates sort of front running really globally. Now, Bitcoin, we're still above the cloud, discounting that downside target now. But we are now short term back above the cloud as well. So it's not a strong recovery by any stretch. I've talked about bond yields a lot in recent days. The Japanese bond yield still my number one concern, edging higher, hitting 2.63%. No big surprises there. We had these targets 2.7, 2.79. This is really going to start hurting Japan, which will also be hit very much by the Middle East energy crisis. UK bond yields also sitting pretty high based on the political uncertainty that we're seeing, and the 30-year has just activated a new upside target. So There's a 28-year high in 30-year bonds, and that is looking now very elevated at 5.7%. So really quite key there. Markets have been shrugging this off, of course. We're seeing the S&P future up higher there, the Nasdaq. We're seeing Nasdaq stocks. We'll look at the Mag 7 in a minute, but really have had an amazing run, really, in the last 5 weeks. So the backdrop of the war hasn't affected things really. We're seeing the Dow still not quite managing to make a new high there. And if we look at UK stocks, they're up a little bit this morning. The DAX future up 1%, not yet breaking to new highs. Japan down 1%, did just nudge a new high there, but I think markets starting to take the debt situation in Japan into their stride. Looking at the tech majors, we have got Amazon all up positively yesterday. Amazon not nudging new highs there, but it has made new highs. It was the first tech stock to do so. Apple continuing stronger now, making new highs on all time frames. So remember, when you see your all-time highs, you get the bullish on the 60-minute, bullish on the daily, and bullish on the weekly because you're above the cloud on all three. So that's quite key. Google looking very strong. This was our strongest call for the year when we did our LSEG seminar. Tomorrow we're doing log scale charts, rollover, and flipping your chart. So we will look at that tomorrow. Meta, a little bit of respite there, up 2.6% yesterday. Microsoft still weak, and Nvidia now starting to run again, having made new all-time highs. It really was 6 months of going sideways, and now we're running again, so that's quite key. And Tesla regaining what it lost the day before. We're seeing that there on the lagging line, so that's quite key. Dow, we saw mostly bullish performance yesterday. Still a bit of a split going on, but on the whole, looking pretty strong. Stocks like tech stocks doing outperforming there. Cisco, look at that, quite incredible. And so big moves there on the day. And if we look at the Nasdaq, again, we saw really huge moves in chip stocks, just really phenomenal moves there. Micron up another 5%. You have to say, where's the top? This is a case for using log scale charts, and to do that in your system, it's really just simple. You just go here for a logarithmic charts, and you can see now that is just a little bit clearer to read than that ballistic arithmetic chart. So that's it for today. Stocks are really shrugging off what's going on in the Middle East, but we are still seeing bond markets looking worrying. Until tomorrow, happy charting. Bye for now.